Hey guys, and welcome to the Working Money Channel. XRP up here, guys, on the daily, trading right now at about 84 cents. Not moving, standing very, very strong in that level of support. All right, yesterday I talked about this Fibonacci retracement, right? Bringing it down from the top of the inter-year high all the way down to the summer. That's when the trend bottomed out before it moved back up. And you guys can see we have been hovering at the 0.236. Zooming out on the XRP chart, you can also see that the 0.236 is very, very close when I bring the Fibonacci from the top of the last bull run to the trough of the bear market. So something interesting to consider there. I saw this from Trader 1976 here. Has anyone noticed how eerily similar XRP price patterns were in 2021 versus early 2017? Fingers crossed, please let history repeat itself. So this is an interesting pattern, a fractal pattern that Trader 1976 has noticed. Very, very similar to what we saw in early 2017. So what he's looking at, actually, I think he means mid 2017. And you know, this is something that I've been showing you guys on this channel in the past as well, this fractal pattern before the blast off. Now, we haven't mimicked a carbon copy of this, but we have seen those similar trends. And you know, I brought it up here, but I think we can get a better idea of what those ups and downs look like from his chart here. He goes into more detail and he's added some arrows here. 3 descending peaks, of course, 2 peaks where later is higher. And so you can see that from 2017. Of course, this one up here is 2021. We are in and around here, guys, hugging the 0.236 on both Fibonacci's. And if I bring up Bitcoin here real quickly, $47,300. Bitcoin is, doing what it's supposed to be doing. I'm going to bring up something interesting here as well. Bitcoin hugging the 0.5 here. When I bring this Fibonacci from back in April down to the trough down here again from the summer, zooming out on Bitcoin, and I take the last bull run. Guess what happens, guys? It isn't the 0.5, but it is the 2.618. So check that out. 2 Fibonacci retracements at different periods of the trend, lining up very closely to where this level of support is, not only on the XRP chart, but also on the Bitcoin chart. I think that level of support is going to hold. I think we are going to go higher in 2022. This brought to us by Michael at Val5 Links. Billionaires. Yes, more billionaires are turning to crypto on fiat inflation fears. The number of billionaires who have invested in crypto increased last year, and that trend could continue into 2022 as fears over fiat intensify. This just goes to that main narrative, right? The people with money are looking to hedge their bets, and so they are turning to crypto. Previously, anti-crypto investors are increasingly turning to Bitcoin and its brethren as a hedge against fiat currency inflation concerns. One example is Hungarian-born billionaire Thomas Peterfy, who in a Saturday Bloomberg report said that it would be prudent to have 2 to 3% in one's portfolio in crypto assets just in case fiat goes to hell. He is reportedly worth $25 billion. So he is just one example here of billionaires saying, yeah, you should be investing in cryptocurrencies to hedge against the fiat fears. And he's saying 2 to 3%. However, it says down here, Peterfy, who holds an undisclosed amount of crypto himself, said that it is possible that digital assets could reap extraordinary returns, even if some could also go to zero. I think it can go to zero. I think it can go to $1 million, he added, before stating, I have no idea. And I feel like a lot of these guys are saying the same thing. I have no idea what it's really going to do. It's still too soon. It's still too new. However, they're also not disclosing how much crypto they hold. He is saying, for the average investor, 2 to 3%. However, who knows how much these guys hold. Bridgewater Associates founder Ray Dalio is another renowned billionaire who revealed his portfolio contained some Bitcoin and Ether last year. So we know about Ray Dalio. Paul Tudor Jones as well bought Bitcoin last year. So we are seeing these billionaires hedging against fiat. That is also part of the story. Wanted to switch gears, guys, a little bit with this. This has to do with the XFi airdrops and some confusion perhaps surrounding that. This is coming from Flare Networks, guys. We did not know that Flare Finance had not factored in the Flare Foundation to their calculation of the XFi distribution. Previously, we had stated that the Flare Foundation will burn 75% of all XFi it receives so as to minimize impact on the community. The burn will be 100%. So that is the official statement from Flare Networks. Flare Finance had to reaffirm this. Flare Finance is an entirely separate development team. We do not share any of the same executives, developers, or team members, and we each are building different types of products. Flare Finance is built on the Flare Networks, not by the Flare networks. And so some people criticizing, like Jungle Inc. here, maybe not naming everything Flare would save you some time. If Aave or Aave was Ethereum finance, things would be confusing. So yeah, Flare finance, Flare networks, two different things. And just to clarify, Wrath of Kahneman also putting his 2 cents in on this. People must understand this. Flare networks, builders of Flare and Songbird, are an entirely different organization than Flare Finance. Just retweeting out Hugo Fillion's tweet with regards to that. The two are not connected beyond using the other's network. And then the dude down here just responds, to be honest, it would make things much easier if they wouldn't use an overlapping brand name, which was also mentioned by Jungle Inc. These guys might be tech geniuses, but they should learn some basic brand management rules. Wrath of Kahneman also saying, absolutely and clearly centrally available information, not littered through Discord, Telegram, and Twitter, and some clear tutorials using the tools commonly available to people. So some suggestions there. Just wanted to clear that up in case you guys were also confused about that. Guys, I saw this from LDN, and this is the 250 fintechs of 2021. Now, he posted this, Ripple, obviously, payment processing network. This is actually a doctored photo. This is a Photoshop. But I think what he just wanted to point out here was just to prove a point here. Ripple in the payment processing network, one of the most important companies here in the space. Hodler of XRP wanted to just bring attention to this, why you faked the image. I also like Ripple and XRP, but your image is misleading. Guys, this is the original image. Ripple, obviously in here with payment and processing networks, but alongside many other different companies in the space. Again, this is the 250 top fintechs of 2021. As per CB Insights, you could probably recognize a lot of these names here. The one thing I did want to point out was the fact that Ripple, under payment and processing networks, is the only company here, if you can recognize, that uses a cryptocurrency that is behind one specific cryptocurrency, namely XRP. The other interesting thing that I wanted to point out were all the Ripple partners that were also mentioned in this infographic. So like Flutterwave, Airwallex, we've got Neum up here, Extendit, and I think there are a couple of others. Anyway, just wanted to bring that to your attention. They were named last year as well in the 2020 list. Also named this year in 2021. And again, the only company I do not see Stellar XLM on this list, the only company listed in the FinTech Top 250 for 2021. Wanted to keep moving, guys, because Anders L posted this 38-second clip, I think, which really gives us an understanding, if you're still kind of confused about how XRP is going to be that bridge asset and how it's going to have value down the road. Before I play you this clip, though, I wanted to mention Crypto Owl's tweet down here in this thread, talking about blockchain-based technology and how it's disrupting a 6.6 trillion daily global FX market. This was just posted here a few days ago, and what's going on with Wells Fargo. So apparently Wells Fargo is now set up with a blockchain-based platform to settle some foreign exchange transactions, a move that's likely to further disrupt the $6.6 trillion daily global FX market. They say down here in this article, the platform runs on Baton System, a proprietary core DLT to settle FX trades in less than 3 minutes. The offering builds on HSBC's FX Everywhere platform, which the bank claims settled over 3 million interbank trades worth over $2.5 trillion since going live in 2018. Now down here it says, we are excited to grow the FX Everywhere network while ensuring we are well placed to transact in new forms of regulated digital currency, says Mark Williamson, Global Head of FX Partners and Propositions at HSBC. Baton's success poses a challenge to Ripple's XRP technology, so a bit of a competitor here. The first digital system to use blockchain for FX settlement and widely adopted by banks around the world. Still, Ripple reportedly claims its solution achieves settlement finality in seconds. We have heard that 3 seconds, and Wells Fargo here using a system that settles in 3 minutes, or rather less than 3 minutes. So is this competition for Ripple and XRP, or is this just an interim solution for Wells Fargo while Ripple is in court with the SEC? We know once we get that guidance, I think a lot is going to change. Ripple has already partnered with a lot of these banks, including Wells Fargo, and so the show must go on in a lot of cases. Blockchain and DLT technology obviously is the future. So despite this, and we know, Ripple is not going to get every single customer on the planet. However, liquidity begets more liquidity. Let me play you this clip now from Anders L. XRP, the end goal, zero volatility, bridge asset.
Technology. Why does technology and access for retail traders suppress volatility? Because there's more market participants. Why does more market participants suppress volatility? Because it increases liquidity. Why does more liquidity equal less volatility? In most cases. It means there's more willing buyers and more willing sellers at every price for an asset. Which means if you have an infinite amount of willing buyers and willing sellers, assets don't move. Creates zero volatility.
All right, so you guys following this? The small volatility detected among with super tight spread as well as a 3-second settlement will make the future settlement with XRP in comparison to today's slow settlement similar to comparing a bike with an airplane. That's how Anders L describes it. I'm going to give it a shot here too. The thing right now is that we don't have the numbers. Even though we are seeing more and more development on the XRPL, we are seeing very positive movement around the world. Ripple and XRP are still being held back in the United States. And a lot of these companies are still very kind of apprehensive, I think is a good word, to utilize the XRPL blockchain, especially if they can't know for sure if XRP is going to be deemed a security or not, or if there's going to be some other kind of problem with that because of the court case. But you understand, when there is more liquidity and when there are more participants, okay, multiply the current XRP utility by 100 or by 1,000, what have you, the volatility will cease. XRP will get at such a high price point and it'll stay roughly stable at that price point because there will be so many participants in the space, so many buyers, so many sellers, and so there won't be too much movement there. The volatility is created by not a lot of sellers and too many buyers, or not a lot of buyers and too many sellers, right? That's how volatility is created in every market. But once we see that exorbitant amount of XRP demand, that's when the price will go up. We've heard David Schwartz talk about this in the past. Price will go up and it will stay up there. It'll stay high enough so that everybody who needs XRP will be able to purchase XRP. And I'm not talking about retail traders, guys. I'm talking about the big institutional money. Dogo Crypto down here saying liquidity begets liquidity. Exactly right. And so I talked a little bit about that Wells Fargo solution here. Of course, settles in 3 minutes. Ripple's XRP, 3-second finality settlement. I also saw this, guys, from XRP Crypto Wolf. So guess what coins are named ISO 20022 compatible as per this article? ISO 20022 is an international organization for standardization, standard for exchanging electronic messages on payments data between financial institutions across the world. We know that this is going to be a big change to the financial space. And as per ledgernomic.com here, they are mentioning the 4 coins in cryptocurrency that are already regulatory compliant. So this is just a brief article just describing what ISO 20022 is, in case the reader doesn't already know. And ISO 20022 adoption in the US, the Federal Reserve Board has stated that its members will adopt the ISO 20022 standard by late 2023. So it is starting to be implemented this year, from my understanding, but it is going to be a lengthy rollout. Well, the Society of Worldwide Interbank Financial Telecommunications, or SWIFT, has said that it has plans to give its members the option to use the new standard from November of 2022, so later on this year. The adoption of ISO 20022 standards will be important for the usability and interoperability of CBDCs once it is rolled out. And just to point it out here, guys, Ripple's XRP, number 1 on the list, XFin Network, XDC, Algorand, ALGO, and Stellar Lumens, XLM. These are the 4 coins as of now that are ISO 20022 regulatory compliant. I know these coins are very popular in the XRP community. Some of them overlap. I know some of you guys are invested in Algorand and XFin, for example, XDC. We all know the history with Stellar Lumens, XLM as well. And of course, there is XRP on that list. But anyway, interesting to note that. And, I think the XRP community, one of the more intelligent crypto communities, I think, out there. I mean, we really do the research. We really do know the ins and outs of crypto and why certain coins are going to be more important in the future rather than other coins. Of course, this is important because 99% of coins are likely to fall to the wayside, and we want to be able to invest in the most important coins. And so sure enough, we've done our research. Also note, guys, 3 out of 4 of these coins, XRP, Algo, and XLM, were also noted in that World Economic Forum document from back in June of 2021. These are 3 of the 6 coins that they mentioned. So that, in my opinion, is also something very interesting to point out. And Stefan Hubert here, bringing us the latest with the Ethereum story, doing more digging on the Ethereum network. 61% of all Ether is owned by the disguised whales of the Ethereum pre-sale and the founders. With Ethereum 2 and Proof of Stake, the founders in these whales will gain full governmental control and power over blockchain. Ethereum is the absolute opposite of decentralized. So just going to Etherscan here, you can see Genesis, 60 million crowd sale, and 12 million others. That equates to over 72 million Ethereum. So certainly not a decentralized network if most of the founders and the whales that got in on the ground floor own 61% of all the Ethereum that has been created. Crypto Eddie is also bringing up some facts here about Ethereum. Jamie Dimon of JP Morgan joined the Ethereum Alliance, bemoaned Bitcoin publicly, throwing shade on crypto, slowing bank adoption, then funded Consensus. Here's another fact. Ripple and XRP threaten JP Morgan and Ethereum domination. It's easy to see why power brokers were set in motion to greenlight Ethereum and attack. Lazarus Mission down here saying the level of influence at these mega banks have over the SEC is astonishing. These government agencies became extensions of the same incumbent banks that broke the financial system. I can see why they do what they do, but they are naive to think this time they can get away with it. And Land Monster down here just bringing up that same Wells Fargo article that I mentioned earlier on in this video. So there's the JP Morgan, Jamie Dimon connection. Of course, we all remember, or at least if you guys were in this space in 2017, Jamie Dimon of JP Morgan said he would not touch Bitcoin with a 10-foot pole. Fast forward a few years and his views on cryptocurrency have clearly changed, at least publicly, maybe not realistically. So some shady business going on here with JP Morgan, Jamie Dimon, the Ethereum Foundation. It all feels like now it's coming together. Why the SEC is protecting Ethereum, why they are suing Ripple and XRP. You know, with more pieces of the puzzle being put together, it's showing an interesting picture, at least I think so. Jimmy Valley has also put in his 2 cents on this. Now, this is Jimmy Valley from Val Hill Capital predicting a potential $35,000 XRP. This would happen through a buyback from the Fed. Now, he posted this interesting tweet thread here, okay? 1 of 8, story time 2. The next time someone says, but they could just buy XRP at 80 cents right now, just show them this thread regarding the same JP Morgan that Crypto Eddie mentioned in this last tweet thread. There is only one JP Morgan, of course. Let's continue. The Department of Justice, and so he's linking all the sources here. For 8 years, thousands of instances of unlawful trading meant to enhance profits and avoid losses. 2 distinct schemes to defraud, tens of thousands of episodes of unlawful trading in precious metals and markets, and thousands of episodes of unlawful trading in the markets for U.S. Treasury futures contracts and in secondary cash markets for U.S. Treasury notes and bonds. The CFTC posting a link here. JP Morgan employees, including those at senior levels responsible for ensuring compliance with JPM's policies, utilize non-approved methods of communication to engage in business-related communications in violation of firm policy. So the rot goes deep, guys, and it goes back in time. Let me continue. Managing directors and other senior supervisors, the very people responsible for implementing and ensuring compliance with JPM's policies and procedures, use their personal devices to communicate about the firm's securities business. JP Morgan manipulated the precious metals markets, Treasury futures market, cash market, notes and bonds market. Senior officials violated CFTC and SEC regulation and JPM's own policies, and provides fiat liquidity to Coinbase and Gemini. Also interesting to note. And 4, they are founding members of EEA, which is the Enterprise Ethereum Alliance. JP Morgan also acted as book manager in the Coinbase IPO. Does Coinbase or Gemini make markets for XRP? No. So that's another clue here that we should be paying attention to. Jimmy Valley says this is not speculation. These are facts. JPM has had the proposed terms since August of 2021. They think do the deal is crazy. I guess they prefer that things just stay as they are. So Jimmy Valley here making a case for why the Fed would not be buying back XRP right now at 80 cents. Coincidentally enough, Patrick Riley here from Reaper Financial posted this. This is Reaper Financial's take on an official position in the matter of the SEC versus Ripple Labs. So they posted a statement here, guys, And let me read you guys this. First, I want to talk a little bit about Reaper Financial and what they're about. So they serve as a digital ecosystem as a natural market regulation tool for a decentralized economy. By unleashing the natural aspect of death upon an artificially created universe, we serve to preserve the value of every unity within. While digital economies are known for their volatility, the Reaper seeks to remove the excess and unvalued assets in order to prevent violent market swings. Reaper Financial accomplishes this mission through a decentralized voting mechanism in which the value of the RPR token, so that's their Reaper token, is used to purchase and destroy the undervalued assets. So it sounds as though they look to burn because all assets destroyed are purchased at market value. No investors are damaged in the process of the reaping. Only those projects whose reputations and credibility warrants reaping are eligible as a means of protecting all parties involved. Reaper Financial is a responsible partner of the community of which we are part of and will at no time take action that is not for the betterment of the community at large. As members of the XRP ledger, we are a carbon neutral and environmentally considerate solution to access both in the digital universe and the tactile facsimile in which we live. So these guys are also built on the XRPL, just as a little bit of a side note here. And so here is their official position on the legal proceedings. The SEC proposes that XRP retail investors are in possession of unregistered securities, meaning that XRP would give holders a portion of the Ripple company and influence its decisions as shareholders. What Reaper Financial LLC does is buy digital assets or property and destroy it. By the fact that XRP and XRP assets can be purchased and destroyed at the will of their owners without the permission of Ripple or affecting Ripple's company in any way, means that XRP can only be considered a product and thereafter property of the purchaser, which may be bought and sold privately or through a marketplace in the same manner as a used car, for example. So if I were to buy a Ford Mustang, it does not give me partial ownership in Ford Motor Company. I can destroy that Mustang because I own it. And so they are saying the same about XRP. Ford is not affected by me destroying it because it is my property, not Ford Motor Company's. Retail investors have every right to acquire, buy, sell, or trade digital properties. Both the 5th and 4th Amendments of the Constitution of the United States protect the personal property rights of the individual to acquire, use, or dispose of property freely. So they are equating XRP to property, and you can do whatever you want with your XRP by and large. So per the 5th Amendment, nor shall private property be taken for public use without just compensation. The federal government and SEC must offer a buyback opportunity to retail owners of said XRP property if a ruling was made against its circulation. If that is the route the federal government chooses to pursue, then the finite nature of the XRP blockchain makes XRP infinitely more valuable than the loosely produced Federal Reserve note, which will only increase in supply. Therefore, the only fair comparison for XRP property is to calculate the total number of XRP divided by the complete and total assets, debt, and liabilities of the US dollar. Any less is a violation of the United States Constitution and the Bretton Woods Agreement, in which the US dollar is the global reserve currency. The SEC case against the property rights of private citizens is contrary to the Constitution, and any ruling or law that is contrary to the Constitution is null and void. An adverse ruling against property rights will be seen as a violation of the Constitution that is in bad faith to the American people. So they are saying, essentially, the SEC, if they rule unfavorably to XRP holders, well then, XRP holders, since they were never under the assumption that they were buying a portion of the Ripple company, should fairly be offered a buyback opportunity, guys. And they're saying here that based on this calculation, this buyback would make XRP infinitely more valuable than the loosely produced Federal Reserve note, which will only increase in supply, meaning the US greenback, of course. So could this come to fruition once we get a verdict, which we're assuming could happen in April of 2022? All right, that was Jeremy Hogan's prediction. The Fed not buying back XRP right now at 80 cents. But instead, waiting for that verdict. Of course, the verdict will create the FOMO, the initial FOMO for XRP. But then based on this calculation here by Reaper Financial, the buyback of the XRP would be infinitely more valuable than the Federal Reserve note, the US dollar. We also remember Jimmy Valley's explanation on this, guys. If you didn't see that video, I will link it up here in the top right-hand corner. I've done a couple of videos discussing Jimmy Valley's proposal to the Fed and Val Hill Capital implementing this for the XRP community. So it's gonna be an interesting 2022, guys. 84 cents, just the beginning. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.